Hello everyone, welcome back. Patrick here. In this video, I want to give you my outlook for 2022 in the stock market. What do I expect is going to happen? What are my strategies? Like, how am I going to be investing? And also, I'm going to show you some of the seasonal trends you have to be aware of. A lot of people kind of forgot about this in 2021. Like, there's a lot of new people in the market. We've been very concerned about the daily fluctuations, especially like since in the media, the narrative is always COVID, the inflation, the CPI data, little things like those that have a big impact short term, but don't really influence like how well companies are doing currently. Right? I feel like the economy is very strong, and I'm going to talk about this in the video. All right, so first, I want to show you that in 2021, we got swerved a little bit. Most of us, people that are on YouTube, watch videos, or YouTubers, we tend to be a little bit more like towards the Russell 2000 or NASDAQ. A lot of growth stocks, a lot of the names that you always hear about, like Palantir, SoFi, companies like those. Well, in 2021, they haven't really performed that well. Let's be totally honest about it. In a lot of cases, they're either flat or down. You have stocks like PayPal, which is a Wall Street darling usually. It started the year, it went up to over $300, and it ended the year to about $190. So almost 50% drop, which we've seen in a lot of stocks. So it actually happened that in the latter part of the year, the S&P 500 actually took over. There's been a massive consolidation of money at the top in companies like Apple, Nvidia, Microsoft, companies like those that feel like a lot safer for the institutional investors. So they've really piled into those stocks, and now the P/E ratios are higher than they've ever been, while a lot of the smaller cap stocks have been completely devastated in 2021. All right, so this leads me to like the second thing I wanted to show you guys, that a lot of us didn't really adjust properly in the latter part of the year. I am slightly guilty of that too. So I have some secret stocks that I need to show you guys in the next few videos. But just to show you, this is my favorite meme of 2021. SPACs in January, the guy is jacked up on steroids. I mean, our returns were absolutely nuts in January and February. And then in May, the guy like is a lot more normal, right? So a lot of us kind of like felt that way with our portfolio. So personally, I ended the year at 38%, which is decent, right? But considering that at one point in the year I was up to 58%, I really took a big hit later in the year, because what happened is even though I sold a lot of the SPACs, well, in some cases I reinvested in other stocks that like were a little bit more speculative, had not really generated a lot of profits yet. SoFi, Palantir, Tattooed Chef, right? A lot of those companies that actually were either flat for the year or actually down. So a lot of people are kind of expecting that 2022 is going to be like, and there's going to be a 20% crash, there's going to be a recession, all of that. Personally, I don't think this is going to happen whatsoever. I mean, if you look at the S&P 500 through the SPY, we are still in a very nice, strong uptrend right now. There's absolutely nothing different there, and the economy is very strong. I mean, or the employment is very low. So what would actually cause this recession? What would actually cause this like market crash? Yes, there are going to be some rate hikes, but they're already like known. Everyone knows about it, and we are still at historically low interest rates, right? So the market can actually sustain these as long as the economy stays strong. And right now, as long as the employment stays pretty good like it is right now, I mean, I don't really expect that we're going to see a recession like some people are calling for, right? This is mostly to like clickbait you, like sell more, get more views for their articles and their videos. And overall, the market is doing really well. It's just that it kind of consolidated into one asset class, this S&P 500. When it comes to the Russell 2000, we have been in this massive channel. How many times did you guys see this on the channel, right? On my channel. So I've had these lines here for several months now, and look at what happened since February of 2021. We are still in this channel. It's never moved since then. Right, so in November, we had that big spike, and finally everyone thought that finally we were going to move, and that has caused us to make a lot of mistakes. Personally, this is when I start to go pretty big into like more bullish on some plays, because of the fact that the market had finally broken out. And this is why we actually took a big like hit in the latter part of the year, when this actually reversed and it really crashed all the way back down to the lower part of the channel. And so now we've kind of stabilized, it feels like. We're like about halfway in this channel. Well, what's going to happen in 2022? It's still anyone's guess. Personally, I am pretty well invested currently. I have a lot of positions. I bought about $80,000 worth of stocks in the past 2 months, especially in the lows around here. So I'm still down on some of the positions, but I'm really well positioned if there is a rebound. Now, with that said, right, you have to be aware of some of the yearly trends. In 2021, as I said, we didn't really pay attention to that, right? In the beginning of the year, it was a lot of SPACs, a lot of spec plays, and then some of us like shifted to other companies that weren't like what was trendy on Wall Street, which was the industrials and companies that had a lot more profits and things like those. So if you look at what happens typically like month by month, you're going to see that January is a pretty good month usually, but February is a fairly bad month on average. Right? This is a S&P 500, but kind of spills to the other indexes usually. Right, so February is usually a pretty bad month going into the tax season. And then especially in April is a really good month when people get their like it's just a reset on the market. People get their tax returns and everything and they put it in the market. Then you have summer is usually a fairly good period until September, which is almost always down if you notice. Right, look at how there's been more years down 51 versus up 42. So that's one of the months that you really need to pay attention to. Of course, it's always going to be different, right? This is just like trends between 1928 and 2021. But that's what I'm saying is that you have to be aware of those yearly trends if you want to like kind of trade around them a little bit. Then usually into like the December season, we tend to go up, which this year, 2021, was actually like a little bit different, right? A lot of us actually saw a big decline later in the year. So the reason why I'm showing you all of this is that January is going to have some pretty big catalysts that I want you to be attentive to. So personally, I've been investing a lot because I expect that Christmas rally is going to spill over into the beginning of 2022, right? The first 2 weeks I expect are going to be fairly green. One of the big reasons for that is that all of the contributions that people have in their retirement accounts are reset, right? All of those tax loss harvesting that we saw over the past few months, that's over, right? At the end of the year, like we start a new year, everything resets to zero. So a lot of institutions are going to start to rebuild their positions. People are going to reinvest in their retirement accounts and all of that. So we should see new influx of money into the market, and that should create like 2 good weeks of some green, right? Hopefully. Now, is that going to be all in the S&P 500, or is it going to spill over to some of the smaller caps? I tend to expect that it's going to at least see some movement in the smaller caps. Right, we saw some pretty huge days later, almost at the right before New Year's. Right, there was one day where I was up 5 or 6%, something like that. So that's what I expect is going to happen in the first 2 weeks. But then the third week of January, you want to be a little bit more careful because the yearly options are going to be expiring. And so everyone that has yearly options or monthly options, it's going to expire on Friday the 21st this year. So there might be a lot more like volatile movement in the market that we don't really know which direction it's going to go, right? A lot of people, if they add big profits with their options, they might be selling. It's kind of hard to expect what's going to happen. So I'm going to be a little bit more cautious in the third week of January. Now, after that, like what's going to be catching more of the attention is going to be the earnings, right? So later in January and early February, you have the earnings season, and as we see, usually this tends to be more of a negative month for the stock market, right? Heading into tax season. So what personally I plan on doing in the next month is, kind of ride that wave up here. And then I'll probably be exiting some of my positions maybe like January 14th, somewhere around there, maybe like Monday 17th, somewhere around there. If I have some profit from the first 2 weeks, I'm going to be looking to see if I can actually close some of them so that I don't hold them through the 21st. All right, guys, so in the wrap up, how does this all affect my strategy for 2022? And I strongly encourage you guys to think about it this way also. Well, I'm going to continue being more defensive in the first month or two until we get a little bit more confirmation about the rally really happening, especially with the small cap stocks. Now, what do I mean by defensive? I'm not talking about going into like Dollar General and stocks like those, or Clorox, stuff like that has no growth. I'm more talking about buying shares and selling options. The reason why is that when you actually buy shares, you don't have a lot of time constraints, right? Whether the stock goes up in 2 months, 6 months, 2 years, yes, you're going to have a little bit of opportunity cost, but it is mostly a fairly safe strategy, right? As long as you're investing in either an established, mature company that already generates profits, or you're investing in a company that is more growth oriented, like SoFi, that is putting all the pieces of the puzzle together to be successful in the future as good management, well, over time, you are probably going to be doing pretty well, right? Think of it this way. Do you think that in Q4 2022, SoFi is going to be better than it was in February of 2021? Odds are pretty good that the company is going to have more subscribers, more revenues, maybe some profits, maybe they'll finally get the bank charter, right? It's likely that the company is going to be better at the end of 2022, 2023, 2024 than it was earlier this year, right? So even though the share price hasn't gone up yet, eventually it's just a matter of time until it does. So that is a fairly straight defensive strategy, just buying shares and letting time do its thing. Now, when you sell options, especially puts or put spreads, you don't really need to be right about the market going up, right? So you don't need the share price to actually go up. You just need it to not crash. And since most companies over time actually go up, well, once again, you're putting the odds in your favor. So let me give you an example here as I wrap up the video. So PayPal is a company that I've been talking about recently, and a lot of us think that the company is going to do fairly well in 2022. The thing is that we don't know when it's going to do well. So I would be more inclined in the first part of the year to actually sell puts or sell put spreads on the company. You can put it under 180 for now, which has been the bottom, than to actually buy call options for now. Because if you notice, often on the channel, I've been talking about the stock rounding out the bottom, but it's not pushing up yet, right? So we have that big downtrend. Now it's starting to stabilize. It's trying to find its footing in the 180 to, this was 197, in that range. But we don't really have that uptrend yet. We don't have that confirmation that the stock is ready to launch back up to 225, 250, 275, right? So that's why personally I'm not super enthusiastic about going all in on bullish strategies like call options quite yet. I'm gonna wait until we have a little bit more confirmation. When this stock goes back up to 197, then it reaches this right here, this peak at 215. Well, it's just a matter of time, right? And when that happens, the stock's going to go back up to 225 and then to probably 250 and up. So that's kind of how I'm going to be playing it in the beginning of the year until we get a little bit more confirmation. I'm going to be a little bit more defensive by buying shares, by selling options. And then when we do get a spike like this and breakout, and it's a little bit more sustained like it was here, that's when I'm going to maybe go even deeper in margin and really focus on stocks that have a lot of growth potential. All right, so I hope this really helps you guys get a little bit of an idea of your strategy for 2021. I do plan on making a lot more videos this year. Hopefully you guys support me. You can look at the Patreon in the description. Right, so I have a lot of videos planned out already, some stocks that I haven't really talked about on YouTube yet, and that are perfect in my opinion for this current market. Be bringing those out to you in the next week or two. So I hope you guys had great holidays, and I'll see you guys in the next video.